So the Fed just met a couple days ago and they actually downgraded their economic outlook for 2025. But why'd they do that? We're actually in the green in the Treasure Valley housing market, and we're in the green when it comes to the housing market at the national level. So I want to walk through the numbers with you in this video, and then I'll talk a bit more about why the Fed was a bit more pessimistic at their past meeting. So let me start with the local numbers. Last month here in Ada County, our median was $530,000, which year over year puts us in the green. We saw an increase in the median by 2.1% year over year the past month, which is right around where you want that number to be. Anywhere between 2 to 5% is a healthy gain. If you have any more than that, that begins to price people out of the market. Now, the number that really surprised me was our sales. Last month, we saw a 14.2% increase in sales year over year and an increase of 22.5% compared to January. Now that surprised me because I knew our sales had gone up. It's starting to get into the spring season, but I didn't think that they had gone up that much. On average, it takes about 52 days to sell your house here in Ada County. That number is up by about 3 days from where we were last February. And our inventory also has increased slightly. We finished the month with about 2.03 months on market. That's up from 1.85 months last February. Now let me break those numbers down just slightly for you. That $530,000 median that I mentioned earlier is actually a combination or an average of the median for existing homes and new construction. So if you're buying an existing home, you're gonna pay a little less. The median for resale homes or existing homes was $520,000 last month, which actually is an increase of about 6.1% year over year. When you look at new construction, the median is actually down by about 2 percentage points, and the days on market is slightly higher as well. It takes about 69 days to sell a new home. That's because it's harder to sell a house that you can't walk into that hasn't been built yet than it is to buy a house that you can walk in and see with your eyes. There's also less inventory for existing homes, about half of what we have in the new construction sector. So moving over to Canyon County, look at this number. The sales were up 39.5% month over month and 11.5% year over year. That's a pretty dramatic increase in sales out there in Canyon County. The median in Canyon County also is up year over year, about 1.6% compared to where we were last year at this time. Half of the homes sold last month sold for less than $416,500 or so. Half of them sold for more than that. It also takes a little bit longer to sell your house in Canyon County. On average, it's taking about 64 days to sell your house in Caldwell, Nampa, and the rest of the county. And there's also a bit more supply out there, about 2.5 months worth. So to summarize what's happening here in the Treasure Valley, we're definitely seeing sales increase. And I think those numbers will continue to increase in the coming months. We're coming into spring and summer. Those tend to be the busiest months out of the year. We're also seeing a slight uptick in inventory, which is all good. But I would say that the general sentiment here in the valley is that there's still not a lot of options for buyers. There's still not enough inventory to go around. And let me illustrate that by telling a bit of an anecdotal story, but I think it makes the point. A couple weeks ago, I put in an offer on a house that was just a regular standard 3-bed, 2-bath, 1,300 square foot home. Nothing fancy about it at all. Didn't have quartz countertops, anything like that, but it was done nicely. And so I knew that there would be a lot of competition on the house. So I put in an offer for $10,000 more than asking price, and we didn't get the house. That house ended up getting 11 offers, 4 of which were cash. So that's not to say that every house is gonna get 11 offers on it, but I think it makes the point that if you have a nice house that's not trashed, it's clean, just really presents nice, that house is gonna sell pretty quickly, and it probably will sell for pretty close to the list price. So how does what is happening here in Boise compare to what is happening across the United States? Well, we're actually in the green nationally as well. Last month, the median was $398,400 across the US, and that's a 3.8% gain year over year. The inventory is also up slightly compared to where we were last year. Nationally, we have about 3.5 months supply of inventory on market. Now, the number that surprised everybody last month was the sales. So month over month, it actually increased by 4.2% when you compare February with January. But if you look at the number of sales from where we were a year ago, we're actually still down by about a percentage point. Now, what's interesting is if you compare the number where we were in February of 2024, the sales then were actually down 3.4% from the year prior. So what all of that means is that we still haven't recovered from the bit of a slump in the sales that we've seen nationally over the past couple years. On average, it takes about 42 days to sell your house here in the United States. So here in Boise, we're about 10 days higher than the national average. Now here's a number that I thought was interesting. The total number of distressed properties that were sold last month account for only 3% of the total market share. Now, if you compare that number to where it was a year ago, it's exactly the same. Hasn't increased at all. So we haven't seen an increase in real estate owned properties, in short sales, or in foreclosures. So what that means is that the overall health of the real estate market across the United States is still pretty good. So here's how one economist summarized what's going on in the housing market across the United States. Each 1 percentage point gain in home prices translates into approximately $350 billion increase in housing equity for American property owners. That means a gain of nearly $1.3 trillion in home value appreciation at a time when the current stock market is undergoing a correction. Moreover, the ongoing housing shortage, coupled with historically low mortgage default rates, implies a solid foundation for home values. Basically, what he's saying is that the housing market in the United States is still very strong, and he doesn't expect to see prices decrease in the foreseeable future. But the nemesis for all of us has been the interest rate. We were hoping that the mortgage rates would come down over the past year. Unfortunately, they really haven't improved that much. Freddie Mac's 30-year fixed mortgage rate averaged last month 6.8%. Look at where that number was 1 year ago. It was 6.74%. So if anything, there was a slight increase year over year when it comes to the mortgage rates. So what's going to happen in the coming year, though? Are we going to see interest rates come down? Well, to answer that question, we got to talk to the Fed. We'd never heard of the Fed until about 2 years ago. Now everybody's really interested in what they have to say. So as you know, they met just a couple days ago and they actually downgraded their economic outlook for this coming year. The reason they did that is they're uncertain about how Trump's tariff policies and how the administration's new policy changes will affect the economy moving forward. And they think that that is going to cause consumers to continue to be cautious. And so their key term looking into this next year really is uncertainty. So in light of that uncertainty, they've projected a 1.7% growth in the GDP over this coming year. Originally, they had predicted that the GDP would grow by about 2.1%. Now, if you've watched any of my videos, you know that the Fed has been projecting 2 rate cuts this year. Now, what's interesting is that the Federal Reserve Board members don't always agree on how the Fed should act. Prior to this past meeting, 4 of the 12 members of the Federal Reserve Board believed that the Fed was being too hawkish, actually, in projecting 2 rate cuts, and they thought that there should be less than 2 rate cuts this year. Now, interestingly, since that meeting, that number has now doubled. So now 2/3, or 8 out of the 12 Federal Reserve Board members believe that the Fed should actually institute less than 2 rate cuts this year. Now, we'll see how the Fed ultimately decides how to act, but I think what it shows is that the Fed is signaling that they're a bit more pessimistic than they were prior to this past meeting. Now, in light of this, Fannie Mae, which is the other government-sponsored mortgage enterprise, they recently downgraded their projection for where mortgage rates will be at the end of this year. Their new projection is that we'll be at about 6.6% by the end of 2025, whereas previously they thought that we would be at about 6.2%. So how is all of this going to affect the housing market here in the Treasure Valley? Well, because we don't expect the interest rate to come down in any significant way in the coming year, because we also have a pretty low supply of inventory on market, I don't expect there to be any major changes when it comes to house prices here in the valley. We might see an increase of 1 to 2%, but nothing drastic. I think we're going to continue to see a cautious consumer, but I don't think he's going to be as cautious as he was in late 2022 and all of 2023 when interest rates were really rising rapidly. We're going to see people buying houses, but I think they're going to hold off as long as possible in hopes that the interest rate will continue to come down. Thank you so much for watching. As always, if you have any questions about the Boise housing market, please reach out to me. I'd love to chat with you.